Hi, everyone. How's everyone doing? Everyone doing okay? Hi, Payman. How are you? Okay. So, good Forex gal, Stavros, Brock, Shahab. What's that mean, Shahab? Inshallah? If Allah wills it, perhaps we'll finally get a move out of this mess in US dollar Swiss. So, every time I look at this 1 hour chart, you know what I ask myself? What am I even doing trading this? Hello, Shahab, because it's such a mess, isn't it? I mean,
Good
look at
morning,
this.
coach. I thought the question would be, why the hell am I looking at the 1 hour chart?
Well, because I do, but but I mean the 1 hour chart, yeah, I shouldn't because at the minimum, the reason becomes clearer as you go to a telescope. So it's a daily that has me continuing to probe, looking for a top, at the 61.8 level. Because of this, really, if I go back to this was pretty directional. And I don't know, could this be an A and an irregular B and we're getting a C? And, I mean, comparatively, if US dollar Swiss had been as strong as the euro was, we would have taken out this high. I mean, that's what attracted me to it. But now it's doing the opposite. So even when the dollar's a little weaker, it's still holding up. But it's because this looks like a wedge to me. And if we do get some action back under 99.5, I think it could trigger it. I actually think that we could get a break all the way back down to these lows. So the weekly, this is my target line, and it would be a quality to this. So gosh, when I go back to a weekly, I don't know, maybe this is a right shoulder and we're going to blow out to the upside, but still attempting this one. 2 week off number, I think, is well, here we're on the weekly. Not going to take much, even though there's 3 days left. Just need to close under 9955 by Friday. So we'll see what happens there. Okay. Euro, so far, so good, even though we're down a few pips. I mean, it held right where it had to. Again, the power of the off numbers, even though we took out 110, 109.80 was important, and 109.78 is a 2 week off number. So, of course, the start of the show has been this. In comparison, most of the dollar weakness has been cable. But just because you haven't been with the star doesn't mean that, it's still not right to be probing this because of what happened last week. That was a 2 week reversal last week. So we really need closes under 109.80 to say this is just another false hope rally. You look at the DSI, it's still, I think, what, about 25. I mean, that's another reason the Swiss is at 14 in the last DSI I saw. So, not a lot of people look shorting it here. So we look at this, and you still have to give it the benefit of the doubt. And as long as we're holding that 109.80 level, I think 110 should hold. Otherwise, we could be all the way back down to 40. See how the markets have changed? I'm talking about all the way down. Well, all the way down used to be, one down day, right? I mean, it could happen in an hour, an 80 pip move. So see how we get conditioned without even knowing it, that what used to be normal has now become abnormal. Looking at the gold, yesterday, Blake asked me what I thought. I still think lower to the bottom of his wedge line, and I don't think you could get excited about precious metals or the long side of bonds or the short side of the market until US dollar yen completes. Now, yesterday I thought we'd get like this, okay? So been constructive all the way out, but I got cute and I thought we'd have an ABC. Instead, we we broke out. It's a confirmed high, and I think targets depends if you call this 108.50 a breakout, even though that's another thing looked like a false breakout Friday. But we didn't get a C wave; it just pulled back and blew. So I don't think you have an important gold low until the yen is done, and I think the 110 handle is possible. I mean, if you really want to be bullish, you almost have to, you know, uh, don't even go back to the low, which was I think 540, but just take it from 640 to 840 is going to give you 1040. And I think it could get there because, and this will be the last part of the narrative, is because even though yields are pulling back, I still think there'll be the 10-year note. You have to sell rallies and 10-year yields, pullbacks between 165 and 160 should be bought because I do think we'll challenge this at 190 before this move is over. Maybe it's a C wave. I'm an amateur Elliotician, but listening to Stephen Grega, maybe this is just A and this was A, B, C for B. And we could have equality is going to take it about 4 or 5 bips above it. And if we get any kind of fib extension of this from here, I actually could see how we could get 220. I think that would be 1.618 of this. So that's what I'm seeing. Any questions before I let it go? 2-week off number? Okay, you know what? I'm going to make you independent right now, Forex Gal. So all you have to do next time, if you want to know, I always say if you could multiply and divide, add and subtract, you could trade. So to find out off numbers, you start on the week that we're on right here, right? And then just count back 2 candles. And the close of the weekly candle is your weekly off number, 108.39. Okay? And now you know how to do it? It's a pretty simple thing to do. I believe it's pretty powerful stuff, or you could use it in a lot of different ways. Okay, Blake, what's new, buddy?
Hey Dale, how's it going?
Pretty good, man. So what are you thinking of the molasses market, except for cable, which is, had some high octane in it?
Yeah, cable's moving all over the map. So I'm, I've been sitting here, looking at. Here,
Grab it.
hold on, just give me the screen.
Oh, and I just heard one thing, and a lot of the guys on CNBC, but I was thinking about you when I heard this narrative by Steve Grasso. You know who he is? He's like head of trading for Frankel, and they have him on all the time. And he was talking about the trade deal and what he thought was going to be constructive for the market is that they're doing it in stages, which stretches out the sell the fact on the S&Ps until it's done. And who knows how long they could stretch out stages or even get stage 1 done. But, I know you were talking about as soon as there was a deal, so maybe they can stretch out this type of wall of worry by doing it in stages instead of just saying, okay, that's it.
Yeah, that makes sense.
You know what I mean?
It does make sense, and and I think that that is entirely possible because we haven't seen any reaction.
No.
Versus S&P, brushing against
3,000 again,
3,000, and then now the market's kind of focused on on Brexit, and wondering if this if a Brexit deal is going to bring in more optimism, and so the market is just kind of stuck, and it sucks because I was hoping for some volatility, and we're not getting it. Maybe it is we have to wait for. Maybe that assessment is the correct one.
I was just commenting on how we're getting conditioned because I was talking about what the euro could pull back to all the way down here. And all the way down there, Blake, was 80 pips. So now, I'm even conditioned that 80 pip move in euro. Wow, it would have to go all the way down there to use to
That'd
get
be a
done
big
in
move.
5 minutes,
Yeah, yeah. So, one of the things that and this doesn't have to do with what you're talking about, what you're mentioning, but what I'm was sitting here looking at today is how weak the commodity currencies are. You notice the Kiwi,
Yeah.
the Kiwi had CPI last night, and CPI came in month over month in line with expectations, but year over year weaker. And the Kiwi just, it's just rolling over. A lot of people are trying to play this inverted head and shoulder pattern. Now you got, the shoulders like getting taken out right here. Kiwi's just getting completely wrecked right now. And the Aussie's heavy, and we have Australian employment tonight, which, if you look at, the Aussie, we're starting to crack here. Aussie looks like it's gonna, we're gonna retest these lows, and I know, excuse me, a lot of people have been trying to play it off of these lows because we had these spike lows down here at 60, 66.80, but it looks like we're gonna retest that low in the Aussie, and I was sitting here going, well, these currencies really look like. And this yesterday's comment, like in our chat room, was basically saying, I don't. There's no like
Reason?
they're just not rallying.
Yeah.
China deal, no China deal, it doesn't matter. They're trading heavy. And then I was looking at copper this morning, and I had it up when you guys were
It's all China, man.
What's that?
It's all China, isn't it?
It is. Look at the copper chart and look at
yeah. Copper could go to $2.
Yeah, copper
If
looks
you look
like
at the weekly, it's on the verge of a major breakdown.
Yeah. I mean, look at the daily chart here. I'm going to pull it up right now. My charts are still running really slow. Everything else runs fine. It's just I don't know why my charts are running so slow with TradingView, but like copper is.
Have you
Look at that.
have you
250 to that measures 170, Blake, if you take that whole formation into account.
Right. Well, this, we got this like possible head and shoulder triangle formation below the 618. It doesn't really matter. I mean, I don't like playing head and shoulders like this. Like, I'm not looking at this saying, okay, it's going to 170, because I don't look at them as continuation patterns. But I mean, I see what you're talking about. But realistically, I mean, copper could do this, which is very
conservative,
logical. That would take us down to 223.
Yeah, that's a big move,
which is a 78% retracement. But that's, if you look at the way the Aussie and the way the Kiwi are responding right now, it's extremely bearish. So I'm gonna share with you a currency pair that I'm so irritated about. If I take the Euro New Zealand here, I bought the Euro New Zealand yesterday, last night actually, right after that CPI number came out. I bought the Euro New Zealand at right here at 170. Well, my cost average was like 174.90 right after that CPI data came out, and then I spun out of it at like 40. In the chat room, I'm like, hey, I'm gonna take my 40 pips, and I'm gonna go. I was putting up Halloween costume or some Halloween stuff last night, and then I get up this morning, and here we are, trading at 176.50. What you have to look at on the Euro New Zealand is we're actually breaking. This is a 10-year consolidation, 9-year consolidation. Big formation and a big possible breakout here brewing in the Euro New Zealand. I mean, this is massive. it's massive, and you know, I'm kind of waiting on my charts here. But Steve just piped in and said that I have to shut down Chrome for 10 minutes. What is that?
No,
What's
no,
that
10
going to do?
seconds. I wrote 10 seconds.
Oh, no,
Um,
but
when is the last time you restarted your Chrome browser?
you know, I think I restarted it yesterday. I think I tried that.
1972.
What?
Sorry, good
What?
morning. I said
Oh,
1972 you restarted it last time.
Right, yeah, probably. It's probably been a while, but no,
So
I
just-
think I restarted everything, and
Just, you know, it might fix it, because there might be other windows like the chat or whatever, the chat room or whatever, that are clogging it. And unfortunately, the vast majority of browsers, you know, with people like us, that we have many windows open at the same time, they keep on piling on to the memory more and more and more. So you might see that just by exiting the browser altogether and, you know, reopening it after like 10 seconds, it might do the trick.
but you know what, Steve, I was, you know, just saying that, you know, everything else that I click on, you know, whether it's, you know,
I
Forex
heard
analytics,
it. Regardless, it's worth trying after the webinar.
yeah,
It might do the trick.
yeah, well, maybe I'll give it a whirl, and hopefully that hopefully that'll work. But well, welcome back, Steve.
Thank
Good
you.
to have you.
Good to be back.
All right. Well, is it really? You're lying. I don't agree with that. You know, when I said yesterday or 2 days ago, it's like nice to be back from Napa. No, it isn't. It really isn't. I was actually enjoying myself drinking wine, a lot of wine, in great weather, and to come back here and sit in front of my computer isn't so much fun. So anyway, but nice to have you back. And I hope you enjoyed taking a couple of days of R&R. But overall, the market's really quiet. The pounds sold off a little bit. One of the points of my analysis yesterday was, as long as we stay above 127, it's still bullish. The problem that the cable's got at the moment is, technically we're a little overbought. We're nudging up against this pretty big previous support. It acted as a big resistance all summer long, well, early in June rather, and we're just knocking our head up against that. So I'm a little skeptical trying to reach for the cable at this point. But obviously this is all news related at this moment.
Exactly.
And yeah, I mean,
we are one headline away from being twice more overbought, or the opposite. You know what I mean?
Right. Yeah, exactly. That's a correct assessment. We are one headline away from being at 130, or we are one headline away from being at 125. So I've got Jack, who is he's in our chat room. He's a young trader. I think I've mentioned to you guys before. He's sitting next to me right now, but he was a son of my son's baseball coach, and he's very interested in currency. So he stops by the office every once in a while, and I was telling him the problem with trading like the cable at this point is that you can't put on any meaningful size and being long or short, because you could literally step away from your computer and be down 100 pips, or you could be up 100 pips too, but within a headline. And so it's trading size with anything that's pound related is very difficult to do at this point. And that's one thing that you have to keep in mind, especially if you have not picked it up or gotten a good price. You've got to be kind of patient. And if you're really bullish the cable, you got to wait for some a decent sized dip, which might be 150 pips or so. Or if you're really bearish, you got to wait for 150 pip, 200 pip spikes higher to sell into, and then hopefully you get a decent price to put your to move your stop to break even and walk away from it. Because right now, trying to be directional with the cable, I think it's bullish. I think it looks bullish. I think while we're above the 200-day moving average, you can play it on the long side, but it is getting a little bit more risky at these levels. And a couple other things that I think we should focus on, speaking of the 200-day moving average, is you got the US dollar Japanese yen. That this was a classic everybody got screwed in this trade. and we talked about this yesterday, getting screwed on both sides. So you had your double top breakdown, everybody short, not so fast, everybody got squeezed, everybody's long. Now everybody's getting squeezed out of their shorts. Now you got people that are long. You're getting close to this 200-day moving average. I would not be surprised if the dollar yen reverses and heads lower from here. And I'm not short and I'm not in it. But one thing that makes me a little skeptical about like the yen just in general, and let me move this out of the way. One of the things that makes me a little nervous about the yen in general is you got the euro yen that is failing above the 120 level today. And, you know, we closed above 120 yesterday and now we're back below it. You know, if they roll over here, I would not be at all surprised. So what I would be looking for today, guys, is just the dollar yen. And if it breaks back below 108.50, that's problematic for all these yen pairs. And if you're long, you know, pound yen or euro yen or any yen, especially like the Aussie and New Zealand yen. These, you know, I already showed you how weak the commodity currencies are. But if you're long like the Aussie yen, I mean, this is a big rejection of a downtrend line. I know we have employment data tonight. I get that. But look at the New Zealand yen. I mean, the New Zealand yen, you know, I was looking at this as a possible breakout above that above that trend line, but oh well, there goes the cable. Cable spikes. Wow, pound's going. Hold on. Wow.
Probably something EU leaders grant political endorsement for any Brexit deal at the summit, which would go, according to EU diplomats. I do see some.
Wow. It just blew up. Up. DUP accepting the latest proposals on consent. RTE's Connolly. So there you go.
There you go, indeed.
As we said, one headline away from, you know.
Yeah, I mean, if you know, like I know a lot of people that were shorting the cable up against these highs. Well, Blake, now you just took it in the shooter, right?
With Stelios, the last day before you came, I think it was Friday, we had this discussion here, and we were telling people that listen, you know, it might not work out. Of course, I mean, they you know, it might completely fail. I mean, any attempt. You know, to find a deal or whatever, but it's extremely dangerous to try to be short to make a few pips by fading it, because, you know, one headline can come through and you might find yourself, you know, especially if you don't use stops or whatever, you know, you might find yourselves a lot out of the money.
Yeah. So it's just, you know, this is one of those situations, guys, where you just got to be really, really, really careful. So Steve, what are some observations that you may, and Stelios, I want to welcome you guys. What kind of observations you have about this, about what's happening here with the DUP? Because this is a big deal, right?
Absolutely. I mean, if I may start, and then if Steve has something to add.
Of course.
I've been saying this for some time, and I was hoping I'd be wrong. Now, I've been saying, and now I think quite a few people were not going to like me, but what I said was DUP, before the current situation, for people to remember, the DUP are actually gave the Tories the majority that they needed to govern. So there was a coalition of a few DUP members of parliament and the Tories. Up until that moment, the DUP had been, their influence on UK politics had been very small. And going forward, again, it's going to be very small. So this is their chance to actually make a difference. Now, the problem we have is that these people are humans and they're politicians. And I think we can all agree that the majority of politicians, I don't want to say corrupt, but yeah, they're corrupt. So I was always saying...
I don't want to say they're corrupt, but they're corrupt.
I was always saying they're going to find a way to accept whatever deal there is eventually, because they know that this is their only chance to make any kind of difference. And unfortunately, I was hoping I would be wrong, but unfortunately, the difference that they're going to be making is not to the people. It's to their own selves. And I know I'm Greek, I'm biased because our politicians have been ridiculously bad in this respect, but I've always said, look, this is just humans we're talking about, politicians. I think in the end, they're going to agree to whatever is proposed to them. and they're going to move on and then go back to leading their own lives and do whatever they do. So unfortunately, I was hoping I'll be wrong, but I don't think I am. So that's my
All right. Well, I appreciate that. And Steve, I'm sure you got a few things to say about that. But guys, I've got to get to trading the Canadian CPI. I got to take a look at it, just because the dollar Canadian, I think, is very choppy. But we might have the risk of actually making a move today, because if you look at this here, we are actually consolidating in what might be a triangle. So I'm gonna go focus on this. But guys, I want to Steve, I want to welcome you back. It's nice to have you back.
Thank you, Blake.
And I want to make another mention. If you guys, well, first of all, if you're looking for a broker, make sure you contact Forest Park FX. They are our webinar sponsor, if you like what you see here. But they provide the ability to join the reimbursement program, where you can get Forex analytics potentially for free based on the commissions that you trade. And if you're in the United States, you can't qualify for that program, but you can get cash back on your trade. So, I don't know why you wouldn't do that, because if you're already a Forex analytics subscriber, because you can literally be trading and get rebates. So and also, you just find a broker that basically fits your needs, because if you're trading bigger size and you're scalping, it's going to make a difference on what your spreads are. And if you are more of a long-term trader, you don't really care so much about the spreads, but you want to maybe pay a little bit less in rollover fees, they're the people that are going to find you those solutions. So make sure you contact Forest Park FX. And also, if you want to be part of the Forex analytics community, and you can't do the premium service, why don't you at least do our light version at $19 a month? Because this way you can get our basic analysis. You can get all of the alerts right to your phone. And I mean, you actually get an app with alerts and updates with our analysis for $19 a month. If you can't afford the premium service, or if it's just maybe you just want to try it out, it's a great way to do it. All right, guys. Hey, I'm going to pass it over to you. Thanks, everybody. Good luck today. Steve, Stelios, it's all yours.
Forex Analytics says, "Let there be light." And there was light.
I laugh every time. So, hey, thanks, Coach.
All right, buddy.
Hey, bye-bye.
Good hunting.
Same to you.
Hello, Steves.
Hello. Hey, Coach.
So just to wrap up on the UK, we've always
by the way, Celio, I didn't want to interrupt you, but we also got two senior EU sources saying the main stumbling block to a deal has been removed, with the DUP accepting the latest proposals on consent, which means that not only we have the acceptance from the DUP, but in essence we have confirmation from the EU that this was indeed a major step forward.
Yes. The only problem now that we have is that this has to be voted in the UK Parliament. And we remember when Boris Johnson was elected with the DUP, their majority was very slight. You could arguably say that the majority might be gone now. So it's still going to be an uphill struggle or at least a struggle to get it pushed through, especially given that Corbyn said today, I think, or yesterday, that anybody from the Labour Party, any Labour MP who votes for this deal, they will not be allowed to be MPs again. So that's a very big deterrent for MPs to not vote for it, basically. So we still have to push it through Parliament, which is not a done deal, far from it. But I still think that it will be done. Just my opinion. I had it from the beginning.
Yeah, it seems likely, and as we've been saying last week, it's extremely dangerous trying to fade that, because you get one headline, and that can be 100 pips to the upside, like that. I mean, a few hours ago, literally a few hours ago, the cable was trading at 126.60, and by the way, it's pulling back.
It's fading. Now. I sold it.
Yeah, look at this. Oh, we got some more news. I mean, look at this volatility. And then we ended up trading a few minutes ago at 128.40, right? So
hold on, we have the numbers now. Hold on, what's the retail sales missed in the US and CPI?
Let's see.
Slight-
US retail sales actually very weak, minus 0.3 versus 0.3 expected.
CPI a little
core
bit weaker
retail
as well.
sales minus 0.1 versus 0.2. Canadian CPI a lot weaker, minus 0.4, and the year-on-year 1.9 versus 2.1. So in essence, I'm gonna say it like I am a CNBC or whatever economist, because they don't really understand economics. Bad data from both US and Canada. Of course, if you really understand economics, bad data from the US, good data from Canada. Since lower CPI is a good thing, you know, they only want you to believe that it's not a good thing, because, you know, of course, the government, all governments need inflation to, you know, inflate away the debt. So let's see what the USD CAD is doing. Speaking of that, actually, probably somewhat the effect of one cancels out the effect of the other, because as you see, this is the third consecutive day that USD CAD is oscillating in a very, very tight range. Needless to say, we also had a question, which I indicated I'm going to answer live. We had a question, what's happening here with the USD CAD? The answer is that the USD CAD, you know, seems to be consolidating. It's rather weak here, but, you know, all I care about to the downside is what's happening with this blue ascending trend line support, because this is actually the trend line support of a huge multi-year channel. And as you see, it's all about that. So that passes roughly from 130 to 130. So, you know, you can go ahead and have a long bias if you want against 130, 130, but a break below 130, 130. You know, I would not want to be holding any long USD CAD positions below that area, because that's going to constitute like a major technical development, and of course a bearish one. So Stelio,
Steve, by the way, there was a headline that the DUP actually has not given consent.
That's why we got.
That's why it got low, but now it's back above 128. So I suggest just switching off any sterling pairs and just waiting for an hour for the dust to settle. So what else?
I remind you, let's go back to data for a second. I remind you that theoretically speaking, retail sales is like, you know, the last stand of the US economy. Like, you know, the consumer is going to save the economy, and the consumer, you know, is going to have the appetite to consume more. Now, nobody's asking the question, with the average consumer having less than $500 in the savings account. Yeah. The question is, how is the consumer exactly asked to contribute more in consumption? The answer is obvious: more credit. Now, how exactly is that supposed to end in a good way? I probably you have to be a CNBC guy to manage to explain that.
Yeah. Anyway, yeah, not a good number. So what else do we have? Just a very quick recap. We had CPI today. I don't know what you talked about. I missed the first 10 minutes, but New Zealand
we didn't mention that. No, Blake actually mentioned it like extremely briefly. Yes.
Okay, well, New Zealand beat, but still commodity currencies are not doing well today. So
indeed, they're not.
Kiwis retreating.
I'm going to go over them afterwards.
Yeah. Slight misses from UK and Europe. So UK 1.7% year on year versus 1.8 expected, and Eurozone went down to 0.8, so it's still going down. Remember, the forecasts are for inflation to stay low for a bit, but then grind higher. Let's see if that materializes. And as we saw right now, Canada also missing. So overall, you know, globally, inflation is dropping, which is in line with the global economic environment, which is definitely having turned lower. So. That's it. I mean, I think we really need to wait for the dust to settle on the pound, because it's just extraordinary, these moves. And yeah, so you can take over the charts now and show whatever you like to show.
Stelio, by the way, when we get quiet markets again, because not that they're very, very volatile, but you know, we've had a pickup in volatility. Last week we had like a session, you know, speaking, you know, about the Fed. I've promised that at some point we're going to have a conversation about inflation, and I just remembered this because we just had like inflation data from Canada, you know, and jokingly, but not jokingly, unfortunately, mentioned, that lower inflation is considered a bad thing, which is, kind of crazy. I'm just gonna, put a spoiler here, and then we're gonna go directly to the charts. And here it is, actually. You can see it here. This is a history of US inflation. This is when we created the Fed here, right? And
Yep.
these are the only two periods that we had, World War and the Great Depression. Since the Fed was created, just look at what's happening with inflation and look what was happening in the previous century. In essence, we had more periods of deflation than inflation, despite this being the most productive period in the US economy. I mean, this is the period that actually built the US economy in what it was later. So as you see, at the very least, you can notice a balance between deflation and inflation, and there was absolutely no problem. And then, humanity realized, we need the Fed. And what is the Fed? Price stability. So on average, what period does look stable to you? This one, having to do with inflation, or this one?
Yeah, they have to eliminate deflation. They have to have constant inflation, and because that's really for the good of everybody.
Yeah, exactly.
Yeah.
So, we're going to talk about this another time. As I said, we have quite a few things to talk about in the markets. Thank you, Stelios. So let me start by mentioning, and we have quite a few questions. Give me a second to also open the chat box here. Okay, good. So let me briefly go over, now, there's a question again about the cable. There is no real reason for me to say much about the cable. Blake already showed it very briefly. Yes, if you remember, I was mentioning that last week. We are now trading above the confluence of the 200 daily moving average, and this wedges resistance, so that's a breakout. And we're currently striving to break above another confluence of resistance, is a 61.8% fib from this last move lower, and horizontal support resistance area roughly where we currently are, like 127.80, 127.90. Okay,
Put up a 4 hour and you'll see a 3 drive.
Yeah, absolutely. We might have a short-term pullback, although, as I said before, it's all about, here's the 4 hour that you were asking for. Let me switch to it. There you go. There you go.
Yep. 1 hour, 2 non-confirmations at that high with a potential, candle's not closed, but we'll see.
Yeah.
Anyway, if I was long, for sure I'd be out. I took a shot at a short scalp. I booked 40. I'm out right now. So anyway, there is something going on. There is something going on.
I totally get it. And yes, at some point, we might get a pullback, but, being short, as we said last week as well, you're looking at something like that, Dale, right? Potentially.
Yeah.
Yeah. And even if that's the case,
it's still constructive. Yeah.
Yeah. We might get something like this, right?
Just a trade. Yeah.
Yeah, exactly. So,
because I'm bearish the dollar for a while till we see 95 or 6.
Yes, speaking of the dollar, and since you mentioned it, you know that I have a short DXY pattern in play, since last week, and this is the reason why.
Looks ugly.
We broke through the first area of interest, which was that trend line support. We retested it 2 days later. We spiked lower in the day. We retested it as a resistance, and it failed. So I think that as long as we trade below that trend line, at least a move towards 97.70, we know that this horizontal support resistance area, has been tested multiple times from the market, and usually creates at least, an initial reaction. So I think the path of least resistance in the short term would indicate that the move towards 97.70 is indeed very likely. So I'm with you there. So having said that, I wanted to show, I know that Blake mentioned it, but I wanted to show from my perspective. I agree, first of all, commodity currencies do look weak. Just look where we got rejected from in the Aussie USD. I mean, we are in this blue descending channel, but within that blue channel, I had actually drawn, this triangle. You can see it here in purple. So we got rejected from this one. So that means that the Aussie is still consolidating in a range that has been getting tighter and tighter. I mean, the range now extends like from 67.70 to 67, which is, and even if you want to take the broader range, like say 66.70, that's still just 100 pips. Okay, so of course, as long as we don't produce, a bullish breakout, we have to respect the downside, which means you have to respect the fact that we might get a breakout to the downside, right? Breaking through 66.70 and heading towards this channel once again. So the Aussie is definitely, definitely remains weak. The Kiwi even weaker. You can see it here. I mean, Kiwi, never managed to take out any resistance levels. But I also wanted to show the Aussie Kiwi. I don't know if you have you had a look at the Aussie Kiwi, Dale?
Yeah, like it held the breakout and looks like it wants to blow again.
That's how it looks like. I mean,
yeah.
Right. I mean, it looks like, first of all, this move lower had only corrective characteristics, right?
Yeah, and look at where it held all that previous resistance.
So look
Perfect.
at it now.
Classic.
I think it wants to go. That's
it's a bull flag. I mean, you can find a chart like this in a textbook.
Exactly. So I'm not sure what's going to happen with the Aussie or the Kiwi, although, as I told you, you have no proof, no confidence to think that they've bottomed and they're about to turn higher. They might, but we still lack any confidence because they haven't produced any kind of technical break. But the Aussie Kiwi, on the other hand, seems to be much easier to read at the moment. So I might not be trading the Aussie USD or the Kiwi against the USD at the moment, but I would much rather focus on the Aussie against the Kiwi. Now, having to do with the Aussie against the yen, nice rejection from the 61.8, and the Kiwi against the yen. You can see the same deal here. I mean, we moved higher nicely from this descending wedge, but once again, we failed to penetrate through the first real area of resistance that we found. So, Kiwi against the yen might have just given people some time to do whatever they want, as it, in essence, worked out over sold conditions while trading in a range. I mean, in essence, we've been trading, let's say, between 66.50 and 69 and change. So, we might as well continue lower from here. And in any case, for me to turn bullish here, I would need to see a daily close above like 69.50. Then and only then we can discuss other probabilities. Okay. So we covered the USD CAD deal, unlikely to get through house, expect elections with an extension being applied. Yes, that is a likely scenario that you mentioned, Gautam, but being applied for with a backdrop of no deal, Euro pound, a good buy on a fundamental basis. Okay, now, having to do with your comments, yes, your comments are valid. That is exactly what we might get, but it's going to be more important for the market to see why are we getting an extension and how things are looking. So even if we get an extension, because the market thinks that they just need a little bit more time to iron out through details, and there is now common understanding that there is a lot of goodwill for the deal to go through, I think that the cable is going to still continue to overperform. Now, having to do with the Euro pound, don't forget, had a very nice move lower, a textbook rebound in a bear flag. I mean, this is a textbook bear flag. I indicated that the day that we were testing this bear flag, I posted that in the chat room saying that, this is the moment of truth. It looks like we want to move lower from here. And, obviously we've already moved quite a long way from that breakout, and in very little time. But I would be very hesitant to try to buy the euro pound here. I can tell you that much. I mean, even simple equality target of the first leg with the second would still point to a move below 85 cents. So I have to tell you, I would be very, very, very hesitant trying to fade the euro pound, at least not yet. Just even look at today's candle, right? At some point, today's candle, was, very positive. I mean, we opened the day at, what was it, like 86.30, and at some point we were trading at 87.10, and now we're back unchanged in the day. So as it seems, sellers are still in control, at least in the short to medium term. So as I said before, I think it's very likely we're going to see 85 cents, and we might actually see it quite soon. Now, from 85 cents, after we fulfill that target, and don't forget that 85 cents was also an area of interest back here. I mean, we found support several times. So from 85 cents, we can have this discussion again. Yeah, perhaps we might see we might get a buying opportunity there. But I wouldn't be jumping the gun, right here, right now. Cable, yeah, we talked about that. Euro pound broken 200 moving average. Yes, we just covered this. Cable, oh my God, a lot of cable. What do you think about USD CAD? We did cover that. As I told you, again, 130, 130. It makes sense if you want to be bullish, but below 130, 130, things become very, very dangerous for bulls. So I would stay away from being bullish below that level. Okay, so now, Coach, are you here, by the way? Just wanted to ask if we have an interview today. So we talked about the DXY and why I think the next move is towards 97.70. Now, if we want to go to what's happening with some more mainstream, like the Euro USD, I can tell you one thing here. Not in a rush to go anywhere fast, there's no question about it. But as you can see here, we've clearly taken out this descending trend line resistance. So somebody, if you want to isolate price action just in this area of the chart, you could make the argument this was a break above a descending wedge. Now momentum is still lacking, but I really think that there is a decent chance that we're going to see more upside, and that would also help obviously quite a lot with the DXY moving lower. Now, as I was saying before we even broke above it, the next area of resistance is at 111.10. You can see this high that we had there. That's going to be quite important to see a move above there, because then we're going to have another element that you want to see in something that's trying to reverse higher, which is a higher high, which we haven't had in a long time. Now, at the same time, we had Euro Swiss being supported once again, most probably by the S&P, and that has actually helped USD Swiss remain rather elevated. So USD Swiss hasn't yet broken below this ascending channel, but I have to tell you that this move higher, and I agree with Dale on that, it looks very corrective to me. So I'm still expecting, I mean, I've been expecting this for a few weeks now. The fact that it hasn't happened yet doesn't change the fact that we've got rejected from the 61.8. This rebound higher looks corrective, so I'm still expecting a resolution probably to the downside, with an initial support being at 98.50. Now below 98.50, I think there's more weakness coming, and probably at a faster pace. Now euro yen actually more or less the moment of truth here as well. Testing previous highs here, so we're going to find out what it wants to do, and move above. I think then opens 123, but we need to see if it can first clear this. I can also indicate it here. Probably I should have already done that with horizontal support resistance area. You can see it here, right? So let's see what it does from here. Now, USD yen has already broken to the upside. Blake showed that. And it might continue to do so. Now, having to do with risk, nothing has changed in the 2 days I was away. If you remember, the last thing I said about risk was that, you know, obviously the S&P remains the global barometer for risk. It remains trapped within this ascending wedge. You can see it here in purple, right? Now, if, you know, for some reason you really want to have some kind of a bias while we're trapped in this wedge, I would have to say that 2960 has to be the defining line here. So if you want to be a little bit bullish or a little bit bearish, you know, above 2960, you can be looking higher towards the wedges resistance. Below 2960, you can be looking lower towards this trend line. But in any case, I think the best thing you can do is wait for some type of a resolution, which would mean, you know, either a break to new highs above this trend line or a break below this, you know, trend line support, especially the horizontal support, confluence of supports at 2860, and I think that that should get the ball rolling. So below 2860, we should see much lower levels. Alternatively, above this wedge should probably create some panic selling, some panic buying. We've seen that happen in the past in this type of a bull market. I mean, you get like a breakout and people are trying to chase and move higher, and that in the short term might create some acceleration to the upside. I wouldn't be surprised if we actually clear this trend line of resistance, if we saw prices move towards like 3,100, 3,200 even within a limited amount of time. Now, in between, I think the best thing you can do is remain neutral, okay? Because anything can happen. Really, anything can happen. Especially now that we know that they're going to be postponing getting some type of a deal for as long as they can. And the reason we've mentioned that months and months ago, it is because if we get some type of a deal, it's not going to be a good one, and then the market is going to have nothing positive to expect. I mean, the data have started souring anyhow, so the market is then going to focus again on, you know, the elevated probabilities of an upcoming recession, and then it's going to end up selling off. Let's see if we have any more questions. Oh, there was a mention about copper before and the metals. So let me go over the metals. First of all, I heard both Dale and Blake being quite negative on the copper, and I totally understand why. Here's the chart, by the way. But there is still even a bullish probability here, right? I mean, we got rejected once again. Just look at the importance of this descending trend line. I didn't draw this today or yesterday. I actually drew this quite a long time ago. So this trend line resistance still matters for the market. There's no question about it. And as long as we remain below it, yes, you should be bearish, but I would be rather careful if for any reason we do break above this trend line resistance, okay? Now, yes, as long as we stay below it, another move towards this wedge's support is likely. Might even be a channel, you never know. I mean, the bullish possibilities if that's a wedge, but you know, it might even end up being a channel, you never know. We need to see more price action for the time being. You know, I've drawn this as a wedge. Anyhow, copper, yes, remains under pressure, which is the exact opposite that somebody can say about palladium. If you remember, I warned some time ago, I was looking for short opportunities when palladium was trading here, because initially that looked like a nice bear flag. I was hoping for one more leg to the downside. That never happened. And then we ended up testing the highs once again. Back then I said, listen, this looks now very much like a cup and handle formation. And if this actually breaks to the upside, then we should be looking for a lot more upside. In all actuality, the implied target of this formation should take us like to 1950 or whatever. And as you see, we've already moved like $150 to the upside after breaking above it. And I really see no strong reason. Perhaps we now want to redraw this ascending channel now that we have more price action. Let's see if it fits more like this. Let's clone this. Yeah, very beautiful. There it is. So remains in this nice ascending channel, and very strong. So I'll keep on saying, don't try to fade it prematurely. Okay, we still have a target that's quite higher from where we are. Even if you want to take an extension from this move lower, from this correction lower, the 161.8 comes at 1830. So why not? We might make it at 1830. We might even make it to fulfill this target at 1940 or whatever that is. Platinum, on the other hand, beautiful rejection from this long-term descending trend line. Actually, probably some people got trapped being long at the worst possible spot there, because we did have a breakout that lasted like for a little bit more than 24 hours. So I'm pretty sure that that ended up catching a lot of people on the wrong side of the market. But keep in mind here, we're back testing. Actually, today we already back tested and it held once again this key support resistance area at 875. So, be a little bit careful here. 875 is definitely an area of support. And now having to do with gold and silver, yes, we are still, within these formations, pullbacks, corrective moves anyhow, because, you can draw this as a channel, you can draw it as a pennant, it depends on how you want to do it. But I'm pretty confident that, these are corrective patterns. Same here with silver, as you see. So, my confidence is still quite high that these are corrective patterns. We might have even found a low already, right? For example, in silver, this low here might have been the low at 1680. We're going to find out soon. But, one way or the other, I'm still expecting, you can see what I've drawn like quite a few days ago on silver, pullback and new highs. Same thing with gold, pullback and new highs. I think are coming once we confirm by breaking through this purple trend line resistance. Okay, so that's what I think about the metals.
Mohammed wants to know when there's going to be the Steve Olgi webinar on fundamentals. When's that scheduled?
We can actually do that. I mean, we'll have a topic of conversation and speak about, every now and then. Like, inflation, employment.
The last time it was very popular.
Yeah, I mean, people actually stick around to the end. I didn't actually expect that.
Me either.
You see, sometimes people surprise you, right?
Sometimes.
Yeah, sometimes.
All the time.
But you know something, us as traders, I think we've proven that we like surprises, right? Because right? I mean,
I've had enough.
If you don't like surprises, you definitely don't like the markets.
Yes.
They tend to produce several of those.
Yeah. Reminds me of a joke, but we don't have time. I'll tell it to you.
Oh, come on. How long is it? We have 2 minutes. I mean, how long is it going to take you?
Oh, okay. So
unless it's PG-17, I don't know.
Okay, so it is kind of like a Japanese joke, but it's really not. So this Japanese guy gets hired at a mining company.
Okay.
And the first day on the job, they're looking all over for him. He was given the title of head of supplies. And they can't find him. They're going up and down the mine shaft, and they go into this one cavern that's very dark, and he jumps out of the dark and says, "Supplies." So there's the surprise. Okay.
Okay.
All right. Hope I didn't offend anyone with that one. My aging trading warrior brothers. I've offended everyone, so it's equal opportunity offending here in face.
Exactly, and you know something, people have to just stop being that sensitive. If somebody got
Yes.
offended, just get over it, please.
Yeah, get over it, man.
Yes, get over it. Yeah.
All right, so we have Matt's with us, Trader Matt, and if you're through.
Yeah, absolutely. Go ahead.
Okay. All right. Thank you, Steve. Great
Yeah.
rundown. And maybe we ought to do one like once a month and, you know, talk about it on Twitter and, you know, have it
Sure.
be fundamental.
I'm gonna have a look at my schedule, and we can do the next one on inflation. I think a lot of people will want to, you know the truth and reality having to do with inflation.
I'll see if I could get Jerome Powell to sit in on this one.
Because there is a lot of propaganda and misconception going on with inflation. When is it good? When is it bad? Why are we actually targeting higher and higher inflation and everything else?
I don't know. Like I threw a flat screen on the grill the other night, and it was the cheapest flat screen I've ever had for dinner.
And you still didn't get a full stomach after that, right?
No, I cut my mouth up a little bit. Anyway, all right. Let's see,
okay,
Matt.
Coach.
All right, buddy. All right, Matt. I'm going to promote you to a panelist, and then I'm going to unmute you. And this is a return interview for Matt.
He
should be
here.
Unmuted.
Yeah, he's here. Oh yeah, we can hear you.
Hi, Matt.
Great. How's it going?
Good. Welcome back, buddy. If you just scroll your mouse over the drop-down menu, you'll see a green box that says share, and then we could see your screen and see what you have on your radar.
Sorry, where am I looking?
You'll look for.
There is a menu. There is a menu. It's drop up. Actually, it's like pop up, until you grab the screen, it's pop up, and then it becomes drop down. From Zoom, that has like several buttons, mute and mute, and everything.
It's a green
else.
box. That's
one of them is green and says share. Yes.
You click that.
Oh, I'm doing it on the web browser. Oh, I see. It's come up now. Okay. You can
yeah.
The other. It says I can't share it while someone else is participating.
No, you can actually.
You can. You click.
You can.
Click it.
It might ask you for confirmation if you want to take it, regardless that somebody else is sharing. If that
just click it.
If that's going to make it easier for you, I just stop sharing.
Okay. Here we go.
Yeah. Now we can see you. Perfect.
Got it.
Perfect. Brilliant.
All right. Thank you so much, Steve.
My pleasure.
Okay, Matt. Enjoy. All right. Thank you very much. So, obviously Bitcoin's on your radar. What are you seeing here? We had that huge triple from early this year. A lot of mania set in, and wondering what you're thinking about this 7,600 level.
Yeah, it's I think it's very, very close to bottoming out, to be honest. I've probably taken a little bit of heat this week. I thought it was going to be a bullish week.
Why?
I had a little look on the video. It was the daily chart was looking quite nice for a continuation.
Okay.
It was this little candle here was looking very, very bullish when I recorded a video on my YouTube. I think it was Saturday or Sunday. I can't remember now. And I was thinking, if it closed out the way it was closing out when I was recording, I was thinking it was going to shoot up and we'd move up from here. But yeah, it's done.
So what happens when you don't get the expected candle or reaction in the market from a level or entry? How do you manage the risk on that? So you didn't get the action you were looking for. You just get out and reassess, or hold it and look to build a position.
It was more so just a kind of directional bias for the week ahead at the point. So it was looking very bullish around here, and then about 4 hours after I put the video out, it decided to tank about $300. But no, to be honest, it was more I was flat at the time. There was no particular trade on that I had, so it was more just analysis I had for the week. But in terms of where Bitcoin is at the moment, I believe it's coming to it's building a base, it's building a bottom for the next leg up, and I don't know if that's going to drop down another $1,000 or so, I've certainly made a case for it to do so. But it's just very much looking like the accumulation phase that we had down here after the initial capitulation drop last year. Similarities are quite eerily similar. The sentiment is very much the same. A lot of people thinking there's a lot more downside than upside.
I could see why, because you know what? You
Yeah.
have the opposite formation at the top that you
Yeah,
had
that's
the
right,
bottom.
yeah.
At the bottom it was an ascending triangle.
Yeah, that's correct.
Recently, a breakdown of a descending triangle. I see nothing bullish in this chart right now.
At present, yeah. I mean, that's kind of a lot of people's perception of it. I think if we look at the weekly, I've got a very much
Okay.
quite obvious textbook continuation pattern to the upside. So
Yeah.
I've said in a lot of in my group and in my videos on YouTube that I expect we'll get some sort of resolution around this point. I
Okay.
think we've got a supporting structure on the daily down here, the 6,800-ish level. So I would kind of expect it to probably hit that at a minimum, since we've come from quite strong resistance. But you know, it's building a base. It's moving sideways. I think it's showing, based on previous examples on Bitcoin, that it's accumulating to move up.
Okay. What is the size of the move between the purple line that we had at the high around 14,000 and then that purple line that we had the breakdown on? Yeah, that range.
In terms of percentage, you're looking about a 35% drop. And typically Bitcoin,
Okay, so I'm just saying the fulfillment of that would be equal to the breakdown. So you take the range from the high
Yeah.
to the purple, and then just add that onto that from there to there equal. Where would that take it?
Cool. Down to about about 6,000, which some people are looking at, to be honest. Whether
Well,
or
you
not
know why they are. Now you know why they are.
Yeah, it's not a particular type of trading style I look at to do that. But who am I to question people that have
Well,
been
I'm
doing
just saying it's you know,
decades?
a textbook example. The only thing that would change it would be closing back above the purple line.
Yeah, for sure. You know, that's what I was kind of expecting to happen sometime soon, to be honest. I
Okay.
think that we've got some lower time frame resistance at this point here, which is actually being consumed from a supply and demand perspective. And you know, as soon as this starts showing some bullish intent, I do believe that the next time we touch this, it's going to look to move back into that range. So,
Yeah.
you know, the big question on everyone's lips at the moment is: are we going to go lower first, or is it just going to keep accumulating and dropping down here? And we have several more months to wait. You know,
Well, isn't that the question we have to ask ourselves every day, multiple times a day,
yeah,
in everything we do?
yeah, right. Yeah, it's very true. There's no certainties in it, but you know, I've taken a couple of shorts this week on Bitcoin, and I've put on my Twitter notoriously that one of the big crypto exchanges decided not to film one of my take profits, and I got stopped out on an almost immediate reversal yesterday. So it's not been the greatest of weeks. I've been sick as well, but in terms of this as a whole, I'm leaning tentatively bullish over it and in the medium term. But I do believe, you know, this can come down to sort of 6,500-ish, absolutely. But you just kind of have to go with the flow. If you had put a gun ahead and said where we're going to be in 3 months' time, I'd quite happily say we'll be higher than where we are at the moment.
Okay. Fair enough. So anything else in crypto land or outside of crypto land? I know that you guys have a trading room. Is it mainly crypto you cover all day long?
So my main focus at the moment is crypto. Yeah, I don't really trade anything else in crypto other than Ethereum, which is probably the biggest altcoin out there. I had a couple of nice trades on this over the past couple of weeks as well. I think with crypto, you've got all these altcoins, which I think are akin to penny stocks. And you know, don't think any seasoned investors or traders particularly want to touch them because of the risk involved in them.
Just a guess. It looks like Ethereum is demonstrating more relative strength than Bitcoin on the recovery. It recovered a lot more and has already negated a breakdown.
Yeah, so I think a lot of people were looking at Ethereum as something that potentially leads Bitcoin, and that what happens on Ethereum is I've not looked into it in too much detail, but a lot of people say they expect what happens on Ethereum is going to happen next on Bitcoin, and Bitcoin's lagging behind it. I'm not too sure on the science behind it, but you know, this is looking quite nice on Ethereum. I agree, for a move up.
Yeah, better looking chart.
Yeah, absolutely. And it's a bit cleaner, the price action, I believe, at present, because at Bitcoin at the moment you're just getting a lot of chop, you're getting a lot of sideways movement. Whereas on this, you know, you've got some quite nicely defined levels which you can take. And this is looking, you know, over the next few hours, like we could find a long setup if it moves and find some strength here. But no, in terms of crypto, I don't really trade anything other than Bitcoin and Ethereum because it's got the most volume. The price action is very nice to read, and it presents a lot of opportunities. In terms of altcoins, I don't touch them personally. I think it's a bit of a gamble, and I think you know, there was definitely a bubble in Bitcoin and crypto a couple of years ago, and I think a lot of people were making hay while the sun shined, opening ICOs, you know, which is the crypto version of IPOs, and you know, a lot of people had cash grabs and then just kind of left the market after that, and you know, there was no real regulation or law to give them a slap on the wrist for it.
Well, there should be a regulation or a law on an exchange. They shouldn't be able to decide not to fill your order, especially if it traded through the price on a take profit order.
Oh yeah, of course. That's
So how does that happen?
believe me, I don't know. I've spoken to their support since. Yes, I had the situation a couple of weeks ago as well on Bitcoin.
Gosh, I mean, it's tough enough to be right, but if you're, you know, you have to battle what should be just business as usual to get filled
Yeah.
on an order, I couldn't trade it. That would drive me crazy.
And yeah, no, it was kind of
You
yesterday.
can't go to sleep and know your orders are going to be executed.
That's it. I mean, I basically I'd shorted from somewhere up here at 8360, and my take profit was about 8240, and it spiked down into it. It spiked down twice and then immediately reversed and took me
Did
out.
it go through 8240?
It did, yeah, it did. It went down to 8231 twice with a market order. So, you know, this is the kind of I guess it's kind of the problem with crypto, and why a lot of legacy traders kind of stay away from it, is because there's no real regulated exchange. There's no real trustworthy exchange or brokerage that offers a retail platform, and you know, these are the kind of issues you have to put up with. And it happened. I can't remember what it was down here as well, and it kind of gave me. It was nice. It was nice in a way. I had an order down here at 7,800, 7,780 or something. Same thing happened. It spiked. It never came back to it. And
are you in the UK, Matt?
I'm in the UK. Yeah.
Let me ask you this, because of what's been happening. Well, there's huge recovery in cable in the last couple of weeks, but because of Brexit, has there been more interest in crypto because of that?
I can't say for certain, to be honest. I'm not really in tune with that side of things. I mean, definitely a lot from Asia in crypto, but
it's mainly Asia, isn't it? Yeah.
Yeah, there's a whole thing, you know, with particular trading sessions. So you've got obviously the London Open, the New York Open, New York Open, those sessions. I think a lot of people have taken the sort of the outlook on Forex, where, you know, you get spikes of volatility around session opens and closes, and then looking for it in crypto. And I don't know if there's a particular obvious tell in the Bitcoin markets where, you know, institutional traders from London or from New York come into the market at those times, as you would expect on the Forex markets. I don't know anything about that, to be honest. I don't. There's a eToro is probably the biggest name that you'll see in the UK, and you know, they've done a great job of their marketing, but I still don't think, even on this run up on Bitcoin recently, I think that a lot of people, this one here, earlier on in the summer, I think a lot of people missed it a lot of people kind of feel, oh, you know, it's not. I didn't know Bitcoin was still a thing. That was kind of what people were saying to me, and you know, I think as long as it stays below where it was at an all-time high, I don't think there's going to be a huge amount of interest in it. I think the New York Stock Exchange, their crypto side of it backed probably very early to the party, and I think if this continues to move up, which I believe it will over time, then we'll see a lot more institutional trading platforms coming out, and hopefully a lot more retail platforms as the space gets regulated. I'd very much like it to become regulated and a bit more accessible to people. But you know, the troubles I've had over the past few weeks of not having a market order triggered when price goes through it, you know, this which is just insane to me. It should be happening, and I don't really think that you look at the order book or a queue of orders at particular levels and not execute these. You know, there's a lot of liquidity and there's a lot of volume trading on the exchanges in crypto.
Yeah, they're probably
So
trading against orders.
Yeah, it's just madness for me that it didn't
Yeah.
happen. So it's some people said, you know, it comes with the territory, but
Well, come over from the dark side to the darker side of FX trading and
I've never had that.
CFD trading, and you know, where at least you know that you
Well,
put
that's
in
the
an
thing, yeah.
order. You
Well,
know,
I came from the legacy markets to crypto. I've been trading forex since 2015. So I don't really. I've never had that issue before. So it's quite. I've always been a very vocal supporter of some of these exchanges, and
Okay.
you know, until it actually happens to me, and you know, twice at the bottom, I guess.
Isn't that something? Could
Yeah,
support something until it gives you a problem.
That's right. Yeah, I used to give people a bit of crap about it. It's like, well, you know, it should be it's your fault and this and that and the other, and then it happens to me, and it's like, it's never my fault. It's never my fault. It's someone else's issue. But no, it was quite interesting. Sorry, I was just going to say it's quite interesting that you know I didn't get an order filled here, and I didn't get an order filled here just before that spike, and it was almost interesting that it didn't happen, and then there was an immediate reversal afterwards. So you know, I look at
and
it.
then they filled you.
And then they filled my stop loss, obviously.
Yeah. Wow. I'll tell you what.
Yeah. Like I say, come to the territory.
I'd find are regulators, tax collectors putting pressure on UK Bitcoin owners, holders for trying to avoid capital gains taxes like the IRS is here in the US?
What's tax? I'm joking.
Oh yeah, I don't know.
I think I've got an accountant, and I think one of the main issues with it. One of the main issues is that a lot of people just don't actually know, and the government have come out and said that if you're trading Bitcoin, you have to kind of look at it as it'll be treated as capital gains tax, similar to forex trading. You know, I've had to fill out self-assessments for that in the past. So I'm just treating it the same way. To be quite honest.
A buddy of mine said that just to use it, that it creates a capital gain. Just to use it to go into the store and pay for something in Bitcoin, then you have to figure out, you know, what's your basis, and it's almost like you're using it for a transaction, and they're looking at it like it's a trade.
I mean, yeah, this is the whole problem with it. I think there's a whole heap of unknown questions. You know, because you could say, well, this morning, let's say I went and traded. I bought a Bitcoin at $8,174, and then I went to go pay for a car with it, and the value's gone down $300 since I bought that Bitcoin and went to pay for the car. But then I also have to declare that as a loss because I've bought up here and it's decreased in value in a mere number of hours.
It's an accounting nightmare.
Yeah, and then it's also the same, isn't it? Because if I'd bought it down here at $7,800 and then went to pay for the car, now suddenly, you know, the next day I've got something that's increased in value by $300. I now have to pay the capital gains tax on that profit, even though I've just bought it with a specific goal in mind to pay for a car. But yeah, you know, I think it's a nice niche for people that are accountants or in the field of law, where you know over the next potentially 5 years, where this entire community starts to become regulated, there's going to have to be specialists in this area to answer these kind of questions. I've seen one girl on Twitter who deals specifically in tax for crypto clients in America. There's nothing like that in the UK. I went to a bank to try to open an account for my business, which is called Bitcoin Trade Group. And as soon as they asked my business name, the girl behind the desk went, "Oh, sorry, I need to go and speak to my manager. Just give me 5 minutes." And I just kind of thought, okay, the word Bitcoin is a bit taboo still, and I think a lot of people will fall behind on the wayside, while a lot of smart companies are looking to adopt it at present. And then obviously, like I said,
so you're willing to go through the pioneer days to stake your claim for your dream, and
sure.
you have to go through sometimes the embryonic stage and stick it out, and so that you're there instead of trying to come back to the party once it's happening. So
yeah, I guess
I admire your conviction about it, to be able to put up with not being filled on orders as a trader.
Oh, look, I mean, I've suffered many losses throughout the years in trading. It's just I guess if you just started and you've got your big winner and it doesn't get filled, you get very disheartened. I was disheartened by it, of course. I'm still human at the end of the day, but it's nothing I haven't really experienced before. It's the same way as if you get stopped out to the pip and then price reverses and goes on and hits your target. Which has happened to me many times as well. I think as traders, you just have to you just have to go through the process, and I don't think that process, you get all those lessons within your first year. Someone like myself who's been trading 6 years or 5.5 years. I've got a number of lessons that I've learned, but someone like yourself who's been doing it a lot longer than I will have all these other experiences that I've yet to get through. So I think it's the same as any career path you go with. That experience comes with more time spent on the field.
Yeah, I've learned that it hurts to get hit in the head with a ball peen hammer. So Matt, I know you work with a group of guys. I believe Trader Main is one of your associates, right?
That's it, yeah.
So why don't you show our viewers what you do for crypto traders, and perhaps your website in case they have an interest in trading markets where occasionally they're not going to get filled.
Yeah, I think I need to put a whole new section on my website about what to do.
Disclaimer: just because a market goes through your price, you better get on the phone with the broker and make sure it's done.
That's right. Yeah, and if they don't, just
right away
or something next to you, get drunk that night.
Yeah.
No, we've got the Bitcoin Trade Group. It's called. This is our website. We're kind of in the process at present of revamping the site, but you can go onto it. It's bitcointradegroup.co, and it's got a load of information about what we do and what we provide. And we do live trading. We've got Maine, who's obviously in Canada, Tyler, who's in Asia, and myself in the UK. So we cover all time zones. We've got a full trading course as well on there. So people can learn if they're beginner traders or they're more experienced traders. And we've got specific nuances that the three of us have learned over the years of trading.
What was that? I saw some prices, $3.49 a month.
That's right. Yeah. We do $3.49 a month or $8.49 for 3 months. And on that we get so you get full access to the trading course, beginner, intermediate, and advanced. You get all of our bite-sized videos as well. We've got something like 300 hours of content on there, and direct access to our community on Discord, which is where we do all of our live trading as well, and where our members copy our Bitcoin trades.
Okay. All right. Well, Matt, I appreciate you coming back here, and interesting story. And I did learn something by looking at both Ethereum and Bitcoin, because I do look for relative strength and weakness. And it's a pretty good thing to know that Ethereum is going to be leading Bitcoin around by the nose. So
allegedly.
Yeah. Well, the chart looks that way. So
And it's
maybe
nice.
it's more than allegedly. So I appreciate that insight.
Is it
And
something you trade? Or you're interested in trading? Just out of curiosity.
you mean crypto?
Yeah.
In crypto, the only crypto trade I did was I bought GBTC early in the year and just traded out of it. I've never done physical crypto trade or even it bothers me on the exchanges. Maybe a CFD I might trade, but no, and I don't have much knowledge about altcoins, and it's still something people ask me about it, and I tell them I really, besides being able to trade any chart, a chart is a chart, I
Yeah.
really don't have a great grasp on blockchain.
That's fair enough. I mean, I tried trading. Well, I had to look at trading Bitcoin through my forex broker, and the spread was atrocious.
Oh yeah.
And there's real liquidity problems for that, because I just, going back to what you were asking earlier, I just don't think there's that huge amount of
Okay,
interest.
so the CFDs are have wide spreads at most brokers, huh?
Yeah, that's right. Yeah, I mean,
How
I used.
much? Like $50 on Bitcoin?
I think it was actually something more like 30 from what I remember. I
30?
use IC Markets, which I think
Okay.
have got the tightest spreads in the world. I think
IG
the
or
IC
IC?
Markets. Yeah, IC Markets, the Australian
Oh.
broker.
Oh, okay.
For my forex trading, and the spread for the forex trades are ridiculously small.
Yeah.
But for some reason, not for some, it should be quite an obvious reason, but on Bitcoin, yeah, the spreads are quite large. So that's why I have to go for one of these rogue exchanges in the crypto world, unfortunately.
Okay, Matt.